sum. From the following details, compute salary chargeable to tax. Old tax regime. He is following old tax regime. What they're asking is, what is chargeable salary? Salary may be having multiple components, but what is taxable? What is chargeable to tax is what they're asking us to calculate for the assessment year 2026-27. Okay. Mr. X is a regular employee of Rama & Co. in Chennai. Okay, regular employee. Why do they have to say regular employee? There could be something in it. He was appointed on 1st of January 2025. So he was only appointed on 1st of January 2025. Okay. In the scale of 20,000 1000 30,000. Okay, which means when he is appointed, 20,000 is a pay, and after a year he'll be increased to 1,000 rupees, and every year followed by his salary will be increased by 1,000 rupees. Eventually 30,000 he will reach after 10 years. He is paid 10% DA forming part of salary for retirement benefits. Bonus equivalent to 1 month pay based on salary of March every year. Bonus also is getting every month, every year March. He contributes 15% of his pay and DA towards recognized provident fund. Okay. And the company company contributes the same amount. Whatever he pays, the company also pays the same amount. Okay. He is provided free housing facility which has been taken on rent by the company. Now comes the RFA per 10,000 rupees per month. He is also provided with the following facilities. This is what we need to A to H. Very important sum. Facility of laptop costing 50,000 exempted. He might be using it for office and personal use, but still it is exempted. Office, computer and laptop. Company reimburse the medical treatment bill of a brother, rupees 25,000, who is dependent on him. Treatment undertaken in a private hospital. Private hospital is fully taxable. The monthly salary of rupees 1,000 of a housekeeper is reimbursed by the company. Obligation of the employee met by the employer is fully taxable. A gift voucher of rupees 10,000 on the occasion of his marriage anniversary. Anything more than 5,000 is taxable. Conveyance allowance rupees 1,000 rupees per month is given by the company towards actual reimbursement of official duty. Is going on the official duty. It is not of a personal or private thing. So, which should be exempted, it is exempted. He is provided personal accident policy for which premium is 5,000 is paid by the company. Accident policy is not something the benefit for the employee. Only he meets with an accident and get disabled or might die, only then his family members might get some compensation. So it is not while he is doing the job, he will not get the benefit as he is working while he is working. So this is something he'll get only when he meets with accident. Okay, so this should be exempted. He is getting telephone allowance of 500 rupees. It is not telephone bill. Telephone bill is something that exempted, but telephone allowance is 500 rupees per month, which is taxable one. Company pays medical insurance premium of his family. Telephone bill and telephone allowance is something that I need to have clarity. I will have to discuss. Company pays medical insurance premium of his family, 4,000 rupees. Medical insurance premium. This is not a benefit. And medical insurance premium is completely exempted. So we need to know what is health insurance, life insurance, accident insurance. Health insurance, if you are hospitalized, medical will be paid by the health insurance company. Life insurance, sum assured will be paid to the family members once it is get matured. Accident insurance, if you are encounter an accident, compensation will be paid by the insurance company. This is the difference between health insurance, life insurance and accident. So let's start the question. First thing first, what is basic pay? Basic pay, note number one, 20,000 rupees is where when he got appointed on 1st of January 2025, from there on 1,000 rupees increment. So 24-25, it falls on the financial year 24-25, belongs to the 24-25 year, on which 20,000 is a monthly salary. So Jan, Feb, March, for the first 3 months. No, not for the first 3 months. From first, we are calculating it for assessment year what? Assessment year 2026-27. So which means the previous financial year is 25-26. So we are supposed to calculate from April 1st of 25. So 1st of April 25 to December 1st of December 2025, which is 9 months, 20,000 is a salary. But on 1st of January 2026, he'll get 1,000 rupees increment. This is what 21,000 rupees multiplied by 3. So 20,000 into 9 months, 20,000, 3 months, 21,000, which comes around 2,43,000 rupees, which is the basic for this employee. This month calculation is very important. How did we get this? Because he was appointed on 1st of January 2025, right? And from 2025, from 2025, from 2025, 1st of Jan 2025 is got where he is appointed. But first 3 months we don't want it. The financial year start from April 1st, right? So April, May, June, July, August, September, October, November, December. Okay, first 3 months, even though he was appointed, we tend to calculate for 12 months. No, we should calculate for financial year starting from April 1st, 2025. So for the first 9 months, which is 20,000 rupees, and starting from 2026 1st Jan till March 31st, that is for the next 3 months of the last 2026, 25-26, 21,000 rupees per month, which is clearly evidently 2,43,000 rupees. Got it? So now the basic pay, note number 1, 2,43,000 rupees. Now comes DA forming 10%. Where it is given in the question now. Okay, he is paid 10% DA, forming part of salary for retirement benefits. 10% DA. What is 10% DA? 10% of 2,43,000 is 24,300. Good. Now comes the bonus. What did they say about bonus? Bonus equivalent to 1 month pay. 1 month pay based on salary of March every year. Whatever is the salary on the month of March, that will be given as a bonus. Whatever salary on the month of March, that will be given as a bonus. What is the March month salary? We know that it is 21,000 rupees. So that 21,000 rupees will be given as a bonus for him. It is clearly mentioned 1 month pay, which is a basic pay. So basic pay, we should not have DA here. Okay, DA is 10%. We should not have 24,300. Again to him, just 1 month pay, which is 21,000 rupees. They have clearly mentioned this is not 1 month salary as bonus. 1 month pay based on the March salary of March month salary every year. So 1 month pay. Pay means basic pay, and basic is now 21,000 rupees. Right? It falls on the new year. 21,000 rupees here. Now employer contribution towards recognized provident fund is 8,019 rupees is taxable. So now note number 2. Note number 2 says salary is equal to these 3 components. One is basic and DA forming and sales commission. On calculation of a recognized provident fund, unrecognized provident fund, statutory provident fund, the salary components should include only 3 components. What is that? Basic plus DA forming plus commission. Basic plus DA forming and commission. What is basic? 2,43,000. DA forming is 24,300. Have they given, did they give any commission details? No such details, which means 0. So 2,43,000 plus 24,300 is 2,67,300 is what the salary. Why do we have to calculate salary? Because about 12% is what only taxable. Up to 12% of the salary is exempted. So what is 12% of 2,67,000 is what? Okay, this is salary. But how much is the employee's contribution? We need to calculate. They have mentioned that employee contributes. First, we need to say employee contributes he means employee. Employee contributes 15% of his pay and DA. 15% of his pay means basic here. We already said. Pay means basic, and DA towards recognized provident fund, RPF, and the company contributes the same amount. So whatever is contributed by the employee, the same amount has also been contributed by the employer as well. So now we need to know, since they have given basic and dearness allowance, we are supposed to calculate 15% of the amount, and the same should be applied to the employer's contribution as well. Now coming back to the note number 2. Coming back to note number 2 now. Here you can look at it. So basic plus TA forming is 2,67,300. We know that. So out of which 15% is 40,095 rupees. Now we know that this is the employee contribution as well as employer contribution. Now 12% is exempted. 12% of the salary, 2,67,300 now. 2,67,300 multiplied by 12% is 32,760. So 40,095 was a contribution, 32,000 is exempted, and what remains 8,019 rupees. 19 rupees is what? Only taxable employer contribution. Employer contribution towards recognized provident fund, taxable amount. Though he had contributed 40,000 rupees, 12% of the salary is exempted. Salary we have calculated now 8,019 rupees is what? Taxable contribution of employers towards recognized provident fund. This is something we have calculated. Note number 2 is done now. Okay, moving on to the next. RFA, this is also a bigger one. Rent-free accommodation. We know the provision, right? First we need to, RFA means salary with 6 items. We need to calculate salary, and then whether the accommodation is owned by the employer or leased by the employer. Owned by the employer, based on the population, 7.55% of the salary is taxable. Yes, and if it is leased or rent, there is a different provision. Leased or rent or 10% of the salary, whichever is less, will be taxable. So now going to the note 3, what they have given in the question. I have wrongly written it as note number 1, but actually it is note number 3. RFA, 6 items. What is 6 items? Basic plus DA forming plus any sales any commission, not necessarily be sales commission, any sales commission, plus bonuses and fees and allowances to the extent taxable. Now we know that basic is 2,43,000, DA forming is 24,300. Any commission, yes. No commission, but bonus is 21,000 rupees. Fees, what is fees? No fees. Any allowances as telephone allowance 500 rupees per month, which is 12 into 500, which is 6,000 rupees. Put together, adding everything together, we get to a number 2,94,300 as a salary, because on calculation of RFA, which is 6 items, on calculation of HRA, only 3 items. Okay. Is the accommodation leased or rent? Yes, it is leased. 10,000 rupees per month is what they are giving it to the house owner, which is 12 months, 1,20,000 rupees. But 10% of the salary, which is 29,430 only. See, this is the salary amount, out of which 10% is 29,430. What is less? 29,430 is what less? So this is what taxable. 29,430 is what taxable on RFA. That's it. Only the notes are, the RFA, we need to calculate. Employer's contribution towards a recognized provident fund, we need to calculate. And the bonus falls on which month? Because we should, had we taken 20,000 rupees, the answer will be wrong. We should take 21,000 because they are giving March month bonus. And what else? Basic pay. Basic pay also, for few months it is old salary, for few months it is new salary. See, for the first 9 months, how did we take first 9 months? Because the financial year start from April to December, 9 months. See, 3, last three quarters only, he's been having a old salary. Next quarter he'll have a new salary of 21,000. This is something tricky twist. That we need to understand. All having put together all these things, now comes the facility of a laptop. It is a tax-free. Medical bills reimbursed, fully reimbursed, fully taxable. Housekeeping salary reimbursed. And gift voucher more than 5,000 tax. Since it is 10,000, it is fully taxed. Conveyance allowance for official duty exempted because he's going for a personal accident insurance. It is fully exempted because only his encounters an accident, he'll get some benefit. I have written benefits will be given only when I means employee meet with an accident, so it's not a benefit to the employee at all. But employer pays premium because employer is a responsible person for the employee, so the employer has to give this to employee, so it is not a benefit, so it is exempted. Telephone allowance, whenever it says allowance, it is fully taxable. It is not a telephone bill. Telephone bill is, this was a doubt in my mind. Telephone bill is exempted. Telephone allowance is fully taxable. Medical insurance premium is tax free. See, so medical insurance premium, health insurance premium, and medical bill. Okay, medical bills reimbursed is taxable. Okay, but medical insurance premium is tax free. Health insurance premium is tax free. Life insurance premium is taxable, fully taxable. Okay. So if you add everything to the 3,78,749, out of which is section 16A standard deduction 50,000 rupees because it is OTR. If you minus this from this amount, if you minus this from 3,07,000, if you minus 3,28,749 is income from salary. That's it. We'll see in the next video.